All right, ladies and gentlemen, let's get started in today's Blue Sky Trading Lab. And once again, the topic of today is a couple different things in the marketplace. First and foremost, I want to talk a little bit about just the multiple time frame aspect of the current market. I want to take a look at it from a day chart perspective versus the intraday side of the equation. And I want to look at more than just the market index. I want to take a look at some of the commodities out there like gold, look at some of the currencies just to kind of get a lay of the land as we kind of conclude this week. Tomorrow, go into an extended weekend so that we can kind of have an understanding of not just the intraday price action, but in general, where's the market technically at. I also want to get into the concept of day tradable asset classes. What instruments do you focus on? I know at Blue Sky we focus primarily on futures and Q, but within the futures basket, there's a lot of different asset classes. Outside the futures basket, there's still a lot of different asset classes. And so I want to just do a broad-based understanding of the different day tradable asset classes and why I choose certain assets that I like to trade more than others. And I want to get into a real to the pajama traders a little bit. And what I mean by the pajama traders is when the market is closed, we obviously know that futures, Forex, crypto, 24-hour markets, well, there's certain time periods in the overnight sessions that are a little bit more important than others. And so if you are going to be a overnight trader, a pajama trader, however you want to categorize it, it's important to understand those banks and when they open up and when they don't. And so the first thing I want to do here, guys, I want to take a look at the major market instruments and just take a look and just talk technically how I see the environment here in the marketplace. Whenever I'm looking technically at any asset class, the number one thing I always want to do is have an understanding of who controls price action, both from a short-term perspective, an intermediate perspective, and a long-term perspective. From a short-term perspective, I really want to look at the intraday side of the equation. On the short term, I want to look at the daily chart. Now, over the course of the last couple weeks, last month or so, we've had a really good run in the market. And that really good run in the market has been a momentum-based run. What that means is every dip that occurs intraday in a momentum condition on the marketplace usually gets picked up in buy the dip mentalities or however you want to categorize that. Now, what I like to look at in that environment when the momentum is firmly entrenched on one side of the coin or the other, the bullish momentum, the bearish momentum, there's a concept that I like to anchor to called the hard 14. What the hard 14 is it's a moving average based support resistance zone. And so if I take off all my other moving averages you see on this chart here right now, and you see I got the 5 EMA, the 200 SMA, the 9 EMA, the 50 SMA, the 20 SMA, if I just take all those off, and I just want to look at the 9 EMA and the 5 EMA there, and I take a look at this and I go back to the market and I say, okay, now, you see this momentum here. Every time we see that dip, either near the 5 or in between the 5 and the 9, that market gets gobbled up, hits the 5, right back up, hits the 5, right back up, in the zone, right back up, hits the 5, right back up. That is a specific momentum-based pattern that occurs quite a bit in the marketplace. And when you see that momentum take hold, whether you're on day 1 of the initial momentum or whether you're on day 19 of the momentum, doesn't matter. You are trading in that direction. Yeah, you might take a short intraday as a scalp because you got a really good technical pattern. But in general, you always want to trade in the direction of the prevailing winds in the marketplace. And when you're talking about the market having momentum, you want to really look at that from an intraday perspective, saying, okay, every time we get that dip, do we get a short-term reversal and we're right back up to the highs of the day? That's what's been occurring for a couple weeks now. What we saw yesterday did change that. It just simply did. If the 5 EMA and the 9 EMA on the daily chart has been acting as a support zone to support any dip buyers for the past few weeks, Well, what can it do on the flip side when that pattern breaks? And so, for example, you come back in time, and me and Mike were talking about in Live with Mike in the closing hour, we were talking about kind of how this entire saga started all the way back here in February when you saw the market break down. And you see the market break down right there. And from that point on, every single time it got in between that 5 and the 9 combo on the daily chart, what occurred? Straight back down, straight back down, straight back down, because the momentum is real and the algorithms that push that momentum is real as well. And so as a trader, you're going to sit there, you're not going to say, I'm going to go against the algorithms. I'm going to go against the market. I think I'm smarter than the market. I know more than the market. Every time that occurred, people got punished, got taught valuable lessons, and that valuable lesson is you don't shift until the momentum shifts. And when that occurred is when you broke back up above the 5, back up above the 9, and not just tested above that level, but technically confirmed above that level right there on the 17th of March. So from the 21st on this breakdown candle here, all the way to this candle here on the break back up, you should have been firmly entrenched in bearish analysis. And then it got choppy for a couple weeks on the daily chart. It actually got a little bit overextended. Right here, it retraced back up into the 200-day moving average. Right here's Liberation Day announcement where we saw that continuation on the downside. Once again, fight back up against the 5. It gets a little bit choppy. But then you get that close right here. And from that close on, when you broke this pivot point in the bearish retracement, once you broke that pivot point, well, what do we see? The 5-9 combo act as a support zone until what happens? It changes. Now, I want you to look at today's price action. Today's price action was pretty choppy here today. You had a little bit of a wide-ranging doji candle is what you had on the daily chart. But what occurred here today, as the market was trying to battle back up and get into those bullish territory, what did it run into? It ran into now decreasing 5 EMA. It ran into a flat 9 EMA. But it ran into that 5 EMA and came right back down the exact same way. When it did that right here, it came right back down. You don't ever want to fight the momentum of the marketplace. And the reason I bring this conversation up is not because I'm personally getting ultra bearish here. I'm not. I'm actually see this trend as a bullish trend. I see this pattern as of right now as a bullish retracement. And we've talked about that in this lab before when we talked about when markets start retracing, we start thinking about the market through the lens of the depth of the retracement conversation. And so when you're looking at the market here, guys, you had this market before yesterday. Everything was a bullish conversation. Yesterday changed that a little bit. You went from a high base structure in the market that was trying to get back up into the ultimate highs. 6,000 is a significant resistance level, by the way. But what you saw now is now the market start to come back down. And so the ultimate question here on the market from a macro perspective is, does the market come down to this 5,800 zone? Does it come underneath that 200-day moving average and get really choppy? As a bull, I really don't care what happens on this doji candle, quite frankly. I do care very much what happens at this 5,800 level right here. And so if the market comes down another day into that 5,800 zone, that's the momentum zone of this trend. And so you've given up the ultra momentum here. Now it's a matter of, can you form a pivot point right there on the daily chart? And if you can form a pivot point right there on the daily chart, that could be the next run until we get back up into these highs. And so I just felt like it's a really important concept to understand here in the market. When high bases on the momentum condition on the daily chart give up that edge, you have to adjust with that. And as you adjust with that, you kind of tap on the brakes a little bit on the bull side of the equation, and you allow the market to start coming back down until you get more aggressive. And where I think we get more aggressive is kind of right there in that 5,800 zone. Just wanted to kind of look at the market from that lens. Now, when you're looking at the NASDAQ from that exact same lens, the NASDAQ is actually held up a little bit better, which means if we start to retrace, this is kind of goes to some divergence conversation that Mike and I was having in Live with Mike. But if we start to pull back down, guess what? Underneath this 2100 zone, you have a little bit more room to run down. And so the one thing I would say, if you're looking at the ES versus the NQ and you're trading this pullback down to the downside, i.e. shorting this pullback here, well, I honestly would think of the NASDAQ here underneath the low of today a little bit more than I would the ES. And the only reason I say that is when you look at the ES, you don't got a lot of room here till you start getting into some major support zones. On the NASDAQ, on the daily chart, you do have a little bit more room to run down before you work into those exact same important support zones, because the NASDAQ has been stronger in the recovery, which means it has a little bit more room to kind of retrace before you get into those important support zones. So that's what we're seeing on the NASDAQ and the ES. RQ, can I get a quick moment of your profitable time for an answer in my questions, into my question and ask questions? I didn't see an ask question, but I would love. Oh, to Steve, yeah, yeah. You know me. I love. I don't not answer questions, RQ. If you ask a question, I answer the question, even if that answer is I don't know. Let me go do some research. Like, I take great pride in that. So when I saw that, I'm like, oh yeah, I hold on, let me put everything on hold and let me go find RQ's question so I can answer it in the real time. So glad we had that cleared up, brother. Glad we had that cleared up. Now, that's how I see the NASDAQ here and the ES. From a daily structure perspective, we went from a high base. Now we're going into the retracement, and the levels that are going to be very, very important is this level right here at about 2,500. That 500 level on any pullback. I'm not talking intraday, I'm talking daily pullback analysis, because if you get underneath 2,100, guys, that's probably where it's going to find some support on the daily chart. That's a good zone as a day trader to play in because there's not a lot there on the daily chart. I love open air, both on the top side, on the downside. I love open air. For example, I would rather trade a breakout of this level with that open air to the top side than trying to figure out what's it going to do with these billion different data points. I love that open air because there's less to stop things. There's less to stop the algos. There's less to stop price discovery. And so that's something to keep an eye on. Both NASDAQ and ES are starting to form pullbacks. NASDAQ's got more room in the pullback, got a little bit cleaner of the pocket. If you are looking at that coming back down, I would look at the NASDAQ. Now, I do want to take a quick peek at some of the other major futures instruments, such as gold on the daily chart. When you're looking at gold, guys, again, daily chart analysis here is not intraday analysis, but it gives you kind of an understanding of the lay of the land. And right now, you got top shelf resistance right now at about 34.30. You got bottom support right now at about, I would give it the 3,200 range. And right now, gold's right smack in the middle of that range. I don't think it pays to have a strong opinion on gold right now. I do think the edge is to the top side, but that's mostly because I believe the ES and the NASDAQ are going to come down a little bit here. And because of that, I do believe gold gets a bid, because gold typically gets a bid when ES comes down, especially in these macro-driven markets. But I wouldn't call it a strong edge on the daily chart. I would say that's more of just my understanding of intermarket relations than anything else. Right now, technically, you're in the middle of a range. It doesn't have a good edge that way, one way or the other. Crude oil, Same conversation going through a reversal. 64 if crude oil is your thing, if energy is your thing, keep an eye on that 64 handle, and so on and so forth. The last two instruments I want to take a look at here is in the crypto space. And does anybody here trade crypto? I know quite a bit of you guys do. Bitcoin, Ethereum, Ripple, any crypto traders here? A little bit, D? Nice. Meech, yeah, you're mainly in crypto. Awesome. Blood, you kill me every time, brother. Every time, brother. Every time. Every single time. Fartcoin. Okay. There is a Fartcoin. This is accurate. Blaz ain't lying. There is a Fartcoin. It does happen. It does happen. They have a lot. I enjoy trading crypto. Crypto, like any other asset, is a pretty good intraday, is a good day tradable asset. Me and Steve been pumping Ethereum. If you ever want to come hang out with us in that closing hour shop, we got some trades going on Ethereum right now. But when you're looking at the environment here, once again, I'd love to look at daily charts, even as a day trader, guys. And I do swing trading, I do position trading as well. But as a day trader, I love looking at daily charts. And the reason I do is I want to see who has the overall control of the market, who has control of the price action. Is the market breaking out of a massive resistance level? And sometimes when you just look at it on a 5-minute chart or a 30-minute chart, you don't have the true context of momentum, because the true context of momentum is a multiple time frame conversation, not just a single time frame conversation. And so when you're looking at Bitcoin right here, Bitcoin had a great breakout, just a fantastic breakout. Now, if you didn't want to chase Bitcoin, and based on what we just learned about the hard 14 of the 5 EMA and the 9 EMA, well, what do you see here on Bitcoin? Every time it gets in between those levels, what occurs? It finds some degree of support, either in between, on, or at the 5-9, or in the combination. And so if you're looking for any pullback scenario on the daily chart, that's where your target zone would be. Pulls back to the 5-9 combo, look for an intraday reversal, and then you're looking to giddy up and go. Bitcoin looks very good on a multiple time frame situation. Obviously, you have the breakout on the weekly chart, you got momentum on the daily chart, you got a theme behind Bitcoin right now as well, and that theme, quite frankly, is the United States government will never not spend money, they will never not increase their deficit, they will never not put those things on the back burner. And Bitcoin is calling that out right now, yesterday, today. It's calling it out for the world to see. When you're looking at the intraday side of the equation, guys, you're seeing a little bit of a topping situation here, right about the 2242 level. That would be that breakout. You're looking at a day trade, that's that breakout. You're looking at a continuation swing trade, that's that breakout. As of right now, kind of stuck in the middle of that analysis. Now, what's playing a little bit of catch up here, and what has some interesting technical setups here is Ethereum, guys. And that's something to keep an eye on here. You got top shelf here, right here around the 2767 level, but you got a really good developing pattern here right around the 200-day moving average. Anything continuation on the breakout, that's a catch-up story. That's something to keep your eye on, everybody. And when you are looking at the overall technical environment on that 1-hour chart, you know this 2700 zone's attracting some sellers, which means if the market ever breaks that 2700 level on this 1-hour chart, well, guess what we should see? Those sellers flip that, hit that reverse button, and now they become those buyers. So keep an eye on Ethereum right around that 2700 level. That looks to be a pretty important supply zone right there around the 2700 level. That's the first thing. What's up, Dale? That's the first thing I wanted to talk about here today. And did that help, guys, as I'm going through the lay of the land, kind of looking at the overall environment on these asset classes? Does that help? Awesome, Dale. Let's get those other, this is the lab. We got to communicate. I talk to you, you guys talk to me. That's how it works. Okay, Meech, yes. 11, yes. Love it. Okay, now, the second thing I want to talk about here is I want to talk about building and maintaining a watch list. Now, what instruments does everybody trade as a day trader? Are you a focus guy, girl? Are you a diversified guy or girl? NQ, color me purple. NQ. Okay, NQ. NQES. Awesome. Now, personally, I'm an ES guy with a slash on the NQ on the indexes. But and again, I've been around the world of trading for as long as I have. I don't have a strong opinion on everybody should do it one way or the other way. I think there is a lot of ways to find success in the world of finance. I think there's 1,000,000,001 different ways to make money in the financial world. Warren Buffett believes in focus. As an investor, he believes in focus. Somebody who believes in focus would focus on one or two instruments, maybe three instruments, but they would focus on those instruments as a day trader because they want to perfect the analysis on that. They want to be able to look at the NQ and without even looking at the chart, know exactly what's transpiring. They understand the behavioral analysis. They understand the technical analysis. They understand the fundamental conditions, the macro conditions, the themes. They focus on that instrument. They become an expert on that instrument. And I have nothing negative to say about that because that is a beautiful way to go about trading. For me, what I have learned is my mind does not work that way. I have to look at multiple instruments because if I don't, I will look at the market doing nothing for 4 hours or 4 days and I will want to go somewhere else. I want to go where the money's flowing. And sometimes that's crypto. Sometimes that's the indexes. Sometimes that's currency. Sometimes that's commodities. I like to have a well-diversified watch list that I trade off of. So sometimes I can move into one or the other. I don't have an opinion on what you should be. You have an opinion on what you should be. I learned that about myself over years of trading. You might learn that about yourself over the course of the next couple months, next couple years. And in 5 years from now, guys, if you learn how to do this game the right way, you hang out live with Mike every day, you come to this lab every Thursday, and we work on these techniques together, you're going to be a trader for a very long time. And I'm willing to bet that you will not be the same trader in a year from now that you are today. And I'm willing to bet that you might evolve in 2 years from now, and 3 years from now, and 5 years from now. And I'm willing to bet that eventually you might want to actually embrace some covered calls and start bringing in some cash flow on some long-term assets. You want to be open-minded on that, but you got to understand it. Are you a focused trader? Or are you a diversified guy? Focus is you focus on 1, 2, 3 instruments. Diversification means you're going to look at a little bit more instruments, but everybody's going to be a little bit different there. So I just want to talk briefly about the different types of asset classes that are really good for day traders in general. First and foremost, the indexes themselves. Everybody can trade the indexes on almost any different type of asset class, whether you're trading stock, options, current or futures. Everybody can trade the indexes. In fact, I'm willing to bet I know people in this lab right now that when Mike is doing his amazing work on the NASDAQ, is maybe even trading the Qs, maybe because that's their instrument of choice. Every index has an ETF that also has a future symbol that you can trade as well. Now, in the options market specifically, over the last year or so, maybe a little bit more than that, the concept of zero DTE has exploded in popularity. Options that expire every single day in the S&P 500 or the Qs are extremely popular day trading vehicles as well. And if you guys want to do a future conversation on zero DTE, we certainly can do that. You also have leverage tradable instruments in the market, meaning ETFs that are triple leveraged, double leveraged. Now, for the futures, if you're trading futures, you don't need any of that. That's why we love futures. That's why we graduate into futures. Remember, in this lab, this is kind of a newer conversation. Obviously, futures are a graduate thing. That's where we want to get into. But a lot of people will trade leveraged ETFs in the market. For example, if you wanted to trade the gold miner triple leveraged ETF, well, that's Nugget. You want to trade the semiconductors triple leveraged ETF, that's SOXL. There's instruments galore in the market. When I first started day trading, I actually started day trading in the Forex market. The Forex market really spoke to me because I do a lot of historical currency analysis, and John Murphy wrote a great book called Intermarket Technical Analysis back in the 80s, and that influenced me. Not in the 80s, I didn't read it in the 80s, I read it in the 2000s, but that did influence me, and it made me really want to understand currency, because I felt like if I could understand currency, I could understand everything else. If I understood currency, which is the bedrock and the foundation of why everything does what it does in the indexes or the commodities, I could really be a good investor. I wasn't even thinking about trading when I read that book. Forex stood out to me. I wanted to perfect my analysis on the dollar. But what I found was trading currency was fun. It was just fun. And it was simple in the sense that you're just buying or selling a currency the same way everybody does around the world every single day when you travel or exchange currencies. And there's only a few currency pairs that you track. Now, I'm not going to get into currency too much here today. Just wanted to kind of bring it up as one of those day tradable instruments like we talked about on the crypto side of the equation. Obviously, Bitcoin, Ethereum, there's other cryptocurrencies out there, but the two big dogs are Bitcoin and Ethereum. Both of them have futures. Both of them have ETFs. You can do it in either the futures or the ETF market as well. Ripple there as well, Hockey, no doubt about that. But it's the futures market that is what I would describe as the market everybody wants to get to. Most people that I meet in trading and teach are very, very new to trading. And a lot of times they start in stocks and ETFs, and they start in the indexes. But then they graduate to options, and then eventually they want to get into Forex or futures. But the futures is kind of that graduate level that you want to get to. For example, you love options for what reason? We love options because of leverage. Well, what has better leverage, futures or options? Futures does. Well, we love Forex because of the 24-hour market. Well, futures has that same 24-hour market. And the beautiful thing about the futures market, guys, is it doesn't matter if you're trading commodities such as copper or gold or corn or wheat or silver or platinum or palladium, or if you were trading the oils such as natural gas or crude oil, or if you're trading the indexes such as ES, NQ, YM, or RTY, or you're trading other futures. Everything's traded in the futures market, from the indexes to the commodities to the currencies to the bonds. Every asset class is traded in the futures market, and it is an inherently leveraged market that also is a 24-hour market. So when you see a lot of traders gravitate to futures, it's because it offers probably the best bang for all of these advantages. Diversification, yes. Leverage, absolutely. Improved access levels, 1,000%, especially with micro contracts, guys. Before micro contracts, this was a hedge fund, institutional Wall Street market. After micros, this is a retail market the same way it is a professional market. It's been a beautiful evolution over the course of the last 10 years, quite frankly, in the futures market. I'm willing to bet 10 years ago, guys, you guys wouldn't be starting in futures. You wouldn't be trading futures probably for 2-3 years into your career because it didn't have that amazing access, quite frankly. Some of the major futures instruments, ES, NQ, CL, GC. Those are kind of the four core that I look at. ES, NQ, CL, GC. ES, S&P. NQ, NASDAQ. CL, oil. GC, that would be gold. I don't trade a lot of bonds. I do like to look at bonds. Makram, say again.
Hey, can you hear me?
I can.
Hey, Matt. Sorry to interrupt, but we're doing a little eval giveaway today to all of your viewers.
This.
It looks like you cracked 60 today.
I love this. You want to do it? You want to do the giveaway?
Yeah, I'm gonna drop the link in the chat here. The giveaway is only valid if we hit 100 viewers. But I want everyone to get in there. Go enter and
Love this.
let's best of
Love
luck.
this so
I'm
much.
gonna draw winners tomorrow.
I love this so much, McCarm. Thank you so much. Let's do that every week. Let's get more and more and more people to this lab. I love this. This is awesome. You're the best.
Awesome. Enjoy, guys. I'm out of here.
Thanks, McCarm. Okay, so coming back to futures real quick, hit the link, fill it out. This is awesome. Love you guys. You're the best. Okay. By the way, we started this lab doing it with 20 people. We now have 60. We're going to get 100. We're going to get 200. And we're going to continue to grow and work on our skill set every single Thursday. What is the secret key? I do not know what the secret key is because I'm not in that. Coach Matt. Thank you, McCarm. Thank you. Okay. Now, when you're building your watch list initially, guys, you got to kind of pick one instrument, right? What's your favorite instrument to trade? Everybody post your favorite instrument to trade. NQ, ES, gold, I don't care, crypto, I don't care. Everybody post your favorite instrument to trade. That's what you start with, right? That's what you start with, your favorite instrument. And then you perfect that. And then you move on. And you add more to it, okay? And then you add more to it. Or until you just feel like you want to focus. But you know who you are more than I do. Are you a focused person? Are you a diversified person? Everybody tell me. Are you a focus? You're focused on one asset. I want to perfect that asset. I want to understand every single degree of that asset so I can trade it on the tick chart to a daily chart. Or are you a diversified guy where you will go to different asset classes? Well, yeah, we're getting it, guys. It's fixed. Coach Matt is now working, but yes. Okay. So coming back to focus versus diversified, I want to hear from everybody here, because I believe when you write something down, it makes you think a little bit more. Quite frankly, focus. I was focused at first. And believe me, anytime Warren Buffett says something, I'm not going to argue against it. He's a focused person. Most of the best traders in the history of mankind are focused people. They just are. It can be a beautiful thing. For me, I do a lot of intermarket analysis, and so it forces me to do more instruments. And my analytical brain, I just can't focus on one if I know something else is running. Hey, McCarm, real quick. They're saying that the code, Coach Matt, is too long for the code in the secret code. It says it's secret. Okay. Andrew says refresh the page, guys. Everybody refresh the page. Everybody refresh that page. Let's get this dialed in here. Okay, good. So whether you're building your watch list and you only trade one, there are a couple asset classes I would still break down and analyze even if I don't trade that. For example, I think everybody should always have an understanding of what gold, Bitcoin, the dollar, and the index is doing. Okay? Those four instruments I think are vitally important to understand, because we're going to get into conversations down the road on divergence, correlation, cross asset classes. I'm going to be teaching you guys a whole bunch of things, and it is those four instruments and bonds and the 10-year note and bonds. Those instruments in understanding how they impact each other. Even if you trade the NQ, I still think that is important. And so if you're a focused person, 1 to 3 instruments are kind of your thing. Mainly you trade one, but you still want to be able to break down and tell me what's happening on the dollar, specifically on the dollar and yields, gold, a little bit there as well. I'm a big gold guy. I love gold. I've been recommending max position sizing in gold from a portfolio investing perspective. I'm not talking day trading on that one. For literally 15 years, guys. Ever since the subprime meltdown, and the United States embraced modern monetary theory for the first time. Thank you, Ben Bernanke. Thank you, exit out stage left on Ben Bernanke, terrible central bank president. Now, a small wish list on the focus side, couple asset classes, you mainly trade the one. The reason you do that, so you can perfect the analysis, so that you can truly understand every aspect of that instrument, and you become a lot more effective and efficient on that asset class. On the bigger watch list, for those that want to have a little bit more exposure, a little bit more diversification, it allows you to come in and out of different asset classes. So if the ES is a doji today, I don't have to sit there and stare and watch paint dry on the wall. I can move to GC. I can move to crude oil. I can move to some other asset class, euro dollar, for example, if I'm really feeling the mood. Now, typically, if I'm not getting anything set up, I'll probably just go golf, quite frankly. But that's why I like a bigger watch list, is so that I can understand the complete picture of the market, number one, because I do a lot more than just day trading, and number two, I like to be able to move from one to the other if one is not trending in a consistent environment. Okay, so I wanted to talk about building a watch list, maintaining that watch list, and just really kind of understanding the difference between traders who will focus on one or a select few asset classes versus other traders who might want to build a little bit more diversified watch list. The last thing I want to talk about today before I turn it over to any questions, if you guys have them in our lab today, is I want to talk about the overnight action. How many of you who here does any trading when the market is closed? Where's my pajama traders, my overnight traders, the people who love when the markets okay, there's my people. There's my people. Yeah, a vast majority of my trades, if you have to look at my trading over the last 15 years, is overnight. I do more overnight trading than I do during the actual intraday hours. There's a reason for that. Between 2010 and 2020, the market went up. But it went up more on the overnight sessions than it did during the actual live market sessions. We're talking the market went up 300%, guys. And when the market was open, it went up 28%. And when the market was closed, it went up 270%. Now, what that taught me in that time period, early on in that time period, is that you have more price movement in the overnight session than you do during the actual U.S. market time periods. And so I really like trading the overnight sessions for that purpose, but also I live on the West Coast. And so when the U.S. sessions open, it's 6:30 a.m. my time when those economic reports come out. It's 6 o'clock in the morning my time, and I am a historically known night owl. I love the night. I love the quietness. I love when everything's shut down. I love the night. And so I love being a pajama trader. An overnight trader. And there's a couple sessions during the overnight sessions that are very important to understand if you're going to be a night owl trader or a pajama trader. And it's really tied to when the banks in their countries are open versus when the banks are closed. Now, the Asian sessions can get wild. There's no doubt about it. There is no doubt about those Asian sessions. They can be wild. But there's not a more volatile open than the European Open. The Bank of London Open is by far the biggest open in the world. It has more cash flow through the London Open. I want you to think about this, guys. There's four major banks in the world. You have the Bank of London. You have the Bank of New York. You have the Royal Bank of Tokyo. The Royal Bank of Australia, and then you have the Bank of Tokyo. Those are your four major banks. And when one of those banks is open, you have more trading, more liquidity, more action, economic reports, prices moving. When a bank is closed, even though the market is open, but the bank is closed, you don't have economic activity. You don't have traders trading. You have people going to dinner. You have people going to the movie. You have people sleeping, even though the market is open. And so when you're thinking about the pajama traders, it's really about when a bank opens and when a bank closes. And then there's some cross activity when two banks are open simultaneously to where you will see a little bit more price movement as well. And so when you're looking at the four major banks, and again, if you want to put Frankfurt, Germany into there, that's fine. There's actually 7, and they're all controlled through the Bank of International Settlements, but that's a different discussion. So, by the way, all of these are central banks, by the way. They're not a local bank. We're not talking JP Morgan Chase. We're talking about the central bank of that country. That's what we're talking about. The New York banks, well, the first bank that opens up to kind of set the 24-hour theme is actually the Bank of London. The Sydney Bank, the Bank of the Royal Bank of Australia. I am color. Sound good, guys? It says it's good on my end. Somebody help color out if you can. So the first bank that opens up is actually this bank right here, Sydney, that opens up at 5 p.m. Eastern Standard Time. The second bank that opens up is the Tokyo, which opens up at 7, daylight savings 8. London opens up at 3 a.m. These are Eastern Standard Time, closes at noon Eastern Standard Time. Now, the overlapping zones are New York and London, Sydney and Tokyo, and London and Tokyo. Now, these two banks, New York and London, when they overlap, especially on the open at 8 a.m. and the closing hour up until noon Eastern, well, you're going to see a lot of price movement in those time periods. When a bank opens up, we typically see more movement when the bank opens up. And a lot of times the price will either go up or down on the open, and it has a tendency to continue in that direction. Because it has a tendency to continue in that direction because it has a tendency to move because of some economic report, some banking situation, a liquidity event, but there's a causation for when the price goes up when the bank opens up or when price goes down when the bank opens up. And so understanding when these banks open is very important for the pajama traders, whether you're trading futures or whether you're trading forex and currency itself. Now, the bank open trade is simply understanding when the bank opens up and what the price and what the technical situation is going into that banking open. And so when you're thinking about the bank open, once again, it opens up 4 different times throughout the 24-hour period on each one of those 4 major banks. Now, when the bank opens up, every single person in society participates in that. Every single person. We're talking about the SWIFT banking system, guys. We're talking about the central banking system that happens from around the world. When you go to your local credit union, that flows through the SWIFT banking system. When you go through JP Morgan Chase, that flows through the SWIFT banking system. When the Fed is pumping money into the markets and purchasing asset classes with that, well, that goes through the SWIFT banking system. Everything goes through the banking system. So everyone participates in this, whether you are an active participant or whether you're not an active participant. But that's why we expect movement, is because everybody's participating. The sun was down, everybody's sleeping. The sun is up, everybody's participating. That happens on a bank open. Now, the process here to really kind of understand the tradable situation is you're really looking at breakouts here. You're definitely looking at breakouts here. So what I like to do is I like to identify where the bank is going to open up. I like to identify on a longer term time frame where the major zones of support and resistance are. And when I mean longer term, I mean the day trader time frame, such as an hourly chart. I want to look at those major zones on an hourly chart, and then I want to bring it down into my execution time frame to get into the trade when it breaks that level. Yona, I'll take compliments all day long. There's no doubt about that. In fact, I'll take more compliments. Let's just all do that. But it is recorded, yes. I can get a transcript. I'll talk to McCarm about that. But I'm going to get the recording to McCarm later on today. He'll post it to Discord so you guys will have the recording. We like to do it the right way. There's no doubt about that. Last week I had a problem with the recording. That was me. That was not BluSky. So you can blame me on that recording from last week. But I'm going to do better this week. I can promise you that. All right. So the bank open trade here, guys. Once again, I identify the timing of when the bank opens up. I identified the major zones of support and resistance on that 60-minute chart, and then I drop it down into my execution time frame, which for me, aggressively, guys, is a 5-minute chart. I've been doing more 1-minute time frames, but aggressively, a 5-minute chart is pretty aggressive for me. So I drop it down into a lower time frame, and then once I get my movement above or below, that's the tradable signal. And so the bank opens up, breaks that resistance level, you see the movement. Bank opens up, breaks that resistance level, you see the movement. By the way, that next retracement could have been traded as well. Bank opens up, breaks the resistance level, you got to chase the momentum, but look at the momentum take hold. Now, obviously, a pretty good case study here. Let's go into the market and let's take a little bit of a look at it from a current market perspective. Now, let's go to the ES here, and I'm going to draw this down into the 1-hour time frame. Now, give me 1 second. I need to put my bank opens on. Okay. Now, do you see these vertical lines here, guys? What these vertical lines represent is when a bank is opening up. And so I have these vertical lines. It's just a script. This is the software you're looking at is the Thinkorswim software. That's the software I trade with. And when you're looking at kind of these vertical levels, all they are scripts that I created using ChatGPT, basically, which means you can do the same thing in almost any broker software. And so basically what these are the levels when the bank is going to open up. And so as you can see, the New York bank opens up right here. You get that movement to the top side. Well, I wasn't looking at that, but I'm just showing you an example. So Tokyo's coming up here in a little bit of time here. Then you got London coming up later on that night. Then you got New York later on tomorrow morning. Okay. So every time I'm looking at the market coming into the pajama sessions, right? The overnight sessions, I'm not going to be staring at the chart for the next 12 hours, guys. I'm not going to do that. I got a life to live. I got a family to raise. I got to go cook some dinner later on tonight. I want to go hang out with my daughter. I got other businesses. I got things to do. Okay. I don't want to stare at the chart all day long, but I do want to be around when these happen. So I want to be around when the bank opens up because I know there could be a good tradable situation there. On the London hour, I want to be around if I can get a good trade there in the short term. Now, I will trade the London Open, and that's why I don't trade the New York Open, is because a lot of times I will be up, and I do like to get a little bit of sleep. And so once again, and again, I'll even show you here on the Euro Dollar Index, Euro USD. So let's remove those. Okay. Now, so we're looking at the New York Open here on the hourly chart, right here. So we're looking at the New York Open here. Now, I want to identify major zones on the hourly chart, right? Major zones. You see an old support, resistance, principal polarity playing out right there at the 131 level. Okay, we know that. I got my levels drawn. I know when the bank is going to open up. It's on that candle. Let's drop it down into a lower time frame to see the movement here. Now, the bank opened up right here. Tested the breakout channel, did not break it. Came right back down, did not break it. Up, down. This candle here closes underneath the channel. Once that closes underneath the channel, is that a signal? That is typically a signal, guys. And it had a pretty decent little trade there. And so when you're looking at the bank open here, guys, I want you to think about the bank open very similar to the cash open. In a market cash open, in the first 5, 10, 15, 20 minutes, sometimes 30 minutes, in the first half hour, let's say, do we typically see more volatility in that time frame than we do in other time frames through the day? Yes, because there's a lot of orders coming in, right? There's information hitting the market. People are making trading decisions. A lot of things are happening. Same thing happens on a bank, and that takes a little bit of time to smooth out. As it does, you see the confirmation signal on the downside here. And so the bank open is a really good trade to understand because it happens every night. And it's an anchor that you guys can utilize every day moving forward. And so I wanted to cover in the lab here today a couple different topics. I wanted to talk about when momentum shifts in the market. We talked about that with the 5 and the 9 EMA when we were looking at that acting as a support and resistance level, both on the downside as well on the top side. When those things change, we start to look at it through a little bit of a different lens. That's occurring here today. That's why we expect a little bit more downward pressure in price. Doesn't have to happen, but that's kind of what the expectation is. Now, the second thing I wanted to really kind of talk about is really kind of just those day tradable instruments. And then I wanted to finish today with the bank open trade. As I always do, did you guys have fun today? We always end 2 questions, guys. Did you have fun? And did you learn? Because that's what this lab is all about. Having fun and learning as we go. Right? Blas, I always have fun with you, brother. I always have fun with you. I always do. I always do. Whether you're a veteran or new to the market, guys, BluSky has your back. That is the reality of the situation. Trying to embrace the educational side, improving the financial IQ of everybody in the BluSky community. I've talked to everybody at BluSky, from the leadership, top-down guys, and embracing increasing everybody's financial IQ is extremely important to us. And that's why I'm here every Thursday, is to help us do that, have these awesome conversations. So I appreciate you guys being the best part of BluSky. I appreciate you guys hanging out with me every Thursday. And I'm going to tell you right now, next week, we're going to be working on divergence and convergence from an indicator perspective. So we're going to work on technical convergence and divergence next week using indicators. And I will be using RSI, MACD as the case study. So I'll be teaching indicators next week. And with this specific, it's every Thursday, Yona. Yes, every Thursday. Indicators with convergence, divergence, MACD, RSI. That's next week. I'm going to bring the thunder. I need you guys to help me out with something, okay? Everybody's got to invite somebody to this lab for next week. I want to get 100 people in this lab next week. I want to make McCarm happy. I want to please McCarm here. Can everybody help me invite somebody else? I'm bringing you're bringing the lightning, RQ. I got the thunder. I think that's what it is, right? I think that's what it is. Yeah. All right, guys. With that said, I hope everybody has a blessed, wonderful rest of your day, and have a great trading day tomorrow. Remember, markets are got an extended holiday weekend this weekend, and yes, we will get the recording up very, very soon.